Okay, so today we're going deep on a book that I am sure a lot of you have at least heard of.
Oh, yes, for sure.
Robert Kiyosaki's Rich Dad, Poor Dad.
Definitely a classic.
Yeah, it's one of those like landmark personal finance books, right? Like it really kind of shook things up when it came out.
Oh, absolutely. I think it offered a really unique and for a lot of people, a really new perspective on how to think about wealth.
Yeah, and managing it and building it.
Yeah.
All of that. And I think the thing that really sticks out for most people, and I think is the most valuable, is this whole concept of the two dads, right?
Right, exactly. So you have Kiyosaki's biological father, his poor dad, who very much emphasized traditional education, go to school, get good grades, get a secure job. That's how you succeed.
The classic story.
Yeah, exactly.
Right.
And then you have the rich dad, who was actually the father of a friend of Kiyosaki's. And he really pushed this idea of financial literacy and being entrepreneurial.
And so for everyone listening today,
Yeah.
we want to go way deeper than like a surface level summary of the book. We're going to pull out the principles, the real like actionable stuff that has made this book so popular, right?
Exactly.
And we want to present it to you in a way that's like super clear so that you can, really grasp what Kiyosaki is trying to get across.
Yeah, make it practical for everyone.
Exactly.
Yeah.
Now, I think it's fair to say that this book has had a huge impact, right? Like,
Oh, yeah.
I think it's sold over 32 million copies.
Something like that.
Yeah, and it was on the New York Times bestseller list for 6 years.
That's crazy.
Yeah, so clearly something in there resonated with a ton of people.
Definitely resonated with people.
Now, it's important to remember that Kiyosaki tells his story through personal stories, right? Like almost parables.
Right, yeah.
And we know that the rich dad was later identified as Richard Keamy.
Right.
And there's been some debate about how accurate or fictionalized some of the stories are.
There's always that discussion.
But today we're focusing on the money lessons that the book gives us.
The core ideas.
Exactly. So let's start with this whole like poor dad versus rich dad thing, right?
Yeah. So I think one of the most fundamental differences between them is their belief systems, their worldviews. For example, the poor dad was very much, the love of money is the root of all evil.
That's like the classic saying.
Right, exactly. And the rich dad completely flips that on its head and says the lack of money is the root of all evil.
Wow.
So right away, you can see that they have very different perspectives on how to approach money and wealth.
It's like a total reframe, right?
Yeah, absolutely.
And I think even the language they use is really telling.
Yeah.
The poor dad would always say, like, I can't afford it,
Right.
which is a statement that basically shuts down all possibilities.
Right, closes the door.
Yeah. And the rich dad's immediate response would be, how can I afford it?
Yeah.
Which is a question that forces you to think creatively and, like, find a way.
Yeah, to come up with solutions.
Exactly.
Yeah.
So just that little shift from, like, a statement of limitation
Yeah.
to a question of possibility is super powerful.
Absolutely. It really reflects their mindsets. The poor dad is reactive and the rich dad is proactive.
I like that.
Yeah. And we see this in other beliefs too. Like the poor dad often said, money doesn't matter, kind of downplaying it.
Yeah.
But the rich dad was like, money is power. He was acknowledging the role that money plays in the world.
Yeah, for sure. And these aren't just like random phrases, right? They represent like totally different ways of seeing the world.
Exactly. They shape how they make decisions and approach their lives.
Totally. And I think the most obvious difference for a lot of people is their advice on education and careers.
Oh, yeah, for sure. The poor dad was all about study hard so you can find a good company to work for.
Get that job security.
Exactly, the safe route.
Right.
And the rich dad, on the other hand, said, study hard so you can find a good company to buy.
Yeah.
So it's like employee versus owner mentality.
Exactly. So this all leads to the first big lesson from the book, the idea that the rich don't work for money.
Right.
So Kiyosaki's saying that the poor and the middle class, they mainly trade their time and their work for a paycheck.
Right. They're trading hours for dollars.
Yeah. But the rich, they focus on building assets, things that will make them money without them having to be directly involved.
Yeah, they make their money work for them.
Exactly.
Yeah.
And Kiyosaki has this story from his childhood that illustrates this really well.
Oh, yeah. What's that one?
So he and his friend Mike were working for the rich dad for like a super low wage. And Robert was frustrated. He wanted to quit because he wasn't making much money.
Yeah, I can see why he'd be upset.
Yeah. But the rich dad used this as like a teachable moment. And he basically told them, the poor work for money. The rich have money work for them.
That's such a simple statement, but it's so profound.
I know, right? Like it totally changes how you think about work and money.
Yeah, for sure.
And then Kiyosaki talks about this thing he calls the fear and greed trap.
Oh, yeah, I remember that. What was that again?
So he says that a lot of people stay stuck in that cycle of working for a salary because they're driven by fear and greed.
Oh, okay.
Fear of not having enough money and the desire to buy more stuff.
Ah, I see. The fear keeps you working and the greed keeps you spending.
Exactly. And that cycle just keeps you relying on that paycheck.
So how do you break free from that?
Well, Kiyosaki says you have to change your mindset. You have to make a conscious decision to take control of your finances.
Right.
And start looking for ways to make money that aren't just trading your time for a salary.
So like start thinking about investments and passive income and things like that.
Exactly. You have to shift your focus from short-term security to long-term wealth building.
I like that.
Yeah. And he gives this cool example from when he was a kid. He and Mike started a comic book lending library.
That's pretty clever.
Yeah. It wasn't like a big business or anything, but it was their first experience with making money that wasn't tied to like working hourly.
So they invested in those comic books and then those comic books started making them money.
Exactly. And that leads us to the second big lesson, the importance of financial literacy.
Yeah, that's huge.
Right. So this lesson is all about understanding how money actually works.
So it's not just about being good at math.
Not exactly. It's more about understanding the basic principles, like the difference between an asset and a liability.
Okay, I think I know this one, but remind me.
So Kiyosaki says an asset is something that puts money in your pocket,
Okay.
and a liability is something that takes money out.
Okay. Yeah, I remember that now. But it's easy to get those mixed up.
Yeah, and I think a lot of people do. Like, think about a house, right?
Yeah.
Most people think of their house as like their biggest asset. But Kiyosaki says, unless it's making you money, like if you're renting it out,
Right.
it's actually a liability.
Oh, yeah, because you have the mortgage payments and the property taxes and all those expenses.
Exactly. It's constantly taking money out of your pocket.
Yeah, that makes sense.
So the big takeaway here is that financial literacy isn't just about how much money you make.
Right.
It's about how you manage it and how you spend it and how you invest it.
It's about making your money work for you.
Exactly. And Rich Dad puts it really well. He says, the rich buy assets, the poor have expenses, and the middle class buys liabilities thinking they are assets.
That's a good one.
Yeah, it's super insightful. So now let's move on to Lesson 3, mind your own business.
Oh, okay. What does that even mean?
So it doesn't mean like be antisocial or anything.
Okay, good.
In the context of this book, it means focusing on building your own portfolio of income-generating assets.
Okay, so like your own personal collection of things that are making you money.
Exactly. You're putting your time and energy into acquiring those assets that we talked about.
Okay.
So Kiyosaki says there's a difference between your profession and your business.
Okay, so like your job versus your side hustle.
Kind of. Your profession is like your main occupation, usually, where you work for someone else.
Got it.
And your business is all about building those assets that will give you passive or portfolio income.
So like I could be a teacher, which is my profession.
Yeah.
But my business could be like the rental properties that I own.
Exactly. And Kiyosaki uses this great example of Ray Kroc and McDonald's.
Oh, yeah.
So most people think of McDonald's as being in the fast food business, right?
Of course.
But Kiyosaki says Ray Kroc knew that his real business was real estate.
Oh, so?
He focused on buying the land and the prime locations for his franchises.
Ah, so the land itself was the valuable asset.
Exactly. And those properties would appreciate in value over time.
Smart.
Yeah. So Kiyosaki gives a bunch of examples of income-generating assets that you could focus on.
Like what?
Things like stocks, bonds, mutual funds, income-producing real estate royalties from intellectual property,
Okay.
like books or music,
Oh, yeah?
and even starting your own business.
So lots of options.
Right. And the key principle here is that once you get that money into your asset column, you want to keep it there.
You don't want to be constantly spending it.
Exactly.
Yeah.
Let it keep making you more money.
Okay, so that brings us to Lesson 4, understanding the history of taxes and the power of corporations.
Right. So this is where Kiyosaki gets into how wealthy people use things like corporations to manage their taxes.
So this is getting a little more complex.
Yeah, a little bit.
Yeah.
But it's important. So he compares how an employee's income works to how a corporation's income works.
Oh.
So as an employee, you earn your income and then taxes are taken out.
Right.
And then you have whatever's left to spend.
Makes sense.
But corporations work differently. They earn money, they pay their business expenses,
Okay.
and then they pay taxes on whatever profit is left over.
So it's like they get to deduct their expenses before paying taxes.
Exactly.
But-
And that can be a big advantage.
Wow.
Yeah. So Kiyosaki talks about building your financial IQ.
Okay, what's that all about?
So it means learning about accounting and investing and how markets work and the legal stuff too, especially around taxes and business structures.
Okay, so basically becoming more financially savvy.
Exactly. Because when you have that knowledge,
Right.
you can make smarter decisions with your money.
Yeah, that makes sense. All right, so what's lesson 5?
Lesson 5 is a really interesting one. It's the rich invent money.
Okay, I'm intrigued. What does that even mean?
It's not about literally printing money.
Okay, good.
Kiyosaki's points is that there are opportunities to make money everywhere,
Oh, okay.
but you need to have the right mindset to see them and then take action.
So it's about being able to spot those opportunities that other people miss.
Exactly. And he uses this example of Alexander Graham Bell trying to sell his telephone invention to Western Union.
Oh, yeah, I've heard that story. What happened?
They turned him down. They didn't see the potential of the telephone.
Wow.
Yeah. And Kiyosaki says that we miss similar opportunities all the time because we're not thinking financially.
So we're not looking for ways to make money from the things around us.
Right. And he says that real money isn't just physical cash.
Yeah.
It's about your ability to identify problems and come up with solutions.
Oh, I see.
And to see and act on those money-making opportunities.
So it's about having an entrepreneurial mindset.
Exactly. Okay, so on to lesson 6. Work to learn, don't work for money.
Okay, so building on that whole escaping the rat race idea.
Yes. So Kiyosaki is saying that if you're just focused on getting a bigger paycheck, you might be missing out on learning valuable skills.
Okay.
Skills that could actually lead to way more money in the long run.
So don't just chase the immediate reward.
Exactly. He contrasts his poor dad, who encouraged him to specialize in one specific area.
Like, become an expert in one thing.
Yeah, with his rich dad, who told him to know a little about a lot.
So, like, be more well-rounded.
Right, because having a diverse skill set can be super valuable when you're an entrepreneur or investor.
I can see how that would be helpful.
Yeah. And he talks about some key skills that are really important.
Like what?
Things like managing cash flow,
Okay.
building efficient systems, and managing people.
Makes sense.
And he really emphasizes the importance of sales and marketing.
Oh, yeah. Those are crucial for any business.
Totally. So the main point here is that if you focus on learning new things, your income potential is unlimited.
You're not stuck with just what you can earn from a job.
Exactly. You can create your own opportunities.
So after all these lessons, Kiyosaki also talks about the obstacles that can get in the way.
Yeah, even if you have all this knowledge right.
Right. So what are those?
He identifies 5 main obstacles.
What's that mean?
Fear of losing money, cynicism, laziness, bad habits, and arrogance.
Okay, so let's break those down.
Right. So first, fear. Everyone feels it,
Oh, yeah, for sure.
but successful people don't let it stop them.
So you got to push through it.
Right. And Kiyosaki says that failure is part of the learning process.
So it's okay to make mistakes.
Exactly. You learn from them and move on.
Okay. What about cynicism?
Well, cynicism can lead to self-doubt and negativity.
And that can prevent you from even trying.
Right. You might not even pursue an opportunity because you're so convinced it won't work.
So stay positive.
Yes. And then there's laziness.
Oh, boy.
Now, Kiyosaki's not just talking about being physically lazy.
Okay.
He's talking about being lazy with your finances.
So like procrastinating on important money stuff.
Yeah, or avoiding those tough financial decisions.
I'm guilty of that.
And he even says that a little bit of greed can actually be a good motivator.
Really?
Yeah, like asking yourself, what's in it for me,
Mm.
can give you the push you need to take action.
Okay. Interesting.
And then bad habits can also hold you back.
What kind of bad habits?
He talks about the habit of paying your bills before paying yourself.
Oh, yeah, I do that.
It's super common.
Yeah.
But he says you should be prioritizing building your own wealth.
So pay yourself first.
Exactly. And lastly, arrogance.
Oh, that's a big one.
Yeah, thinking,
Yeah.
Everything can be really dangerous.
Because then you stop learning.
Right. You're closed off to new ideas and opportunities.
So stay humble and keep learning.
Exactly.
Yeah.
So Kiyosaki wraps things up by giving some really practical advice.
Okay, what's the main takeaway?
He encourages you to take action.
Don't just sit around thinking about it.
Right. Go out there and seek out new ideas and opportunities and find mentors or teachers who can guide you.
Always good to have someone to learn from.
Absolutely.
Yeah.
And he goes back to those basic definitions. Assets, put money in your pocket. Liabilities, take it out.
Right.
And the main goal is to keep building that portfolio of income-generating assets.
Got it.
And he emphasizes that it's not just about how much you make, but how much you keep.
That's so true.
And that the rich make their money work for them.
And he also introduces this concept of financial aptitude.
Yeah, what's that about?
So it's like what you do with your money once you have it,
Okay.
how well you manage it and grow it.
So it's not just about earning, it's about what you do with it after.
Exactly.
And he reminds us that our minds are our most powerful assets.
Right, because our minds are what allow us to learn and create.
Exactly. And he breaks down income into 3 types.
Oh, yeah. What were those again?
Ordinary earned income, which is like your salary or wages.
Okay.
Portfolio income from investments like stocks and bonds.
Mm-hmm.
And passive income, which is money you make without having to work for it directly.
Rental income or royalties?
Exactly. And he says the goal is to build those passive and portfolio income streams.
So you're not relying solely on your job.
Right. He also talks about taking calculated risks.
You can't be afraid to step outside your comfort zone.
Yeah. And being open to opportunities that you might not see at first.
Okay.
And he says that true financial security comes from having multiple streams of income.
So not just one job.
Right. Because if you lose that job, you lose your income.
Makes sense.
But if you have multiple streams of income, you're more protected.
Yeah, that's smart.
And he talks about how luxury should be a reward for investing in real assets.
Not something you buy with debt before you're actually wealthy.
Exactly. You shouldn't be living a lifestyle you can't afford.
Right. Build your wealth first, then enjoy the rewards.
And he says that savings should be used to make more money, not just pay bills.
So don't just let it sit in the bank.
Right. Make it work for you.
And for more experienced investors, he talks about how important it is to know how quickly you can get your investment back.
Mm-hmm. Yeah, like how long does it take to recoup your initial investment?
Okay.
And then he shares this interesting piece of advice from Rich Dad. Give what you want first, and it will come back in buckets.
That's an interesting one.
Yeah, it's about having a mindset of abundance.
Like if you want more money, give money away.
Kind of. It's more about being generous and not being afraid to share your wealth.
Okay, I can see that.
And he ends with a powerful statement that sums up his whole philosophy. Money is not real. It is an illusion, an idea. The science of making money is about thinking differently, identifying opportunities that help build revenue-generating assets.
So it's all about changing your mindset and seeing the world in a new way.
Exactly.
So as we wrap up our deep dive into Rich Dad, Poor Dad, the main message is pretty clear. It's about changing how you think about money.
Yeah.
It's about becoming financially literate, acquiring assets, and thinking like an entrepreneur.
Absolutely.
Yeah.
And the book shows us that financial independence is totally achievable.
You just have to understand and apply these principles.
So here's a final thought for you to ponder. Think about your own financial decisions right now.
Okay.
Which of those philosophies that we talked about, the poor dads or the rich dads, is guiding your approach to money?
That's a good question to ask yourself.
Yeah. And what's one small step that you can take today to start moving towards that rich dad mindset? We encourage you to keep exploring these concepts and see how they can work for you.
It's a journey.
It is.
Yeah.
Thanks for joining us on the Deep Dive.